So at this point, I'm pretty sure all of you are already excited to talk to these fund managers and ask your questions. So let me invite all of our fund managers to join me again. So Sir June Tarubago, Mike Enrile, Sir Ed, Sir Trinidad, Ms Gabs, and of course, Miguel Agarao. Okay, so what would you advise fund holders that are still in the negative because of the coronavirus pandemic? So I'd like to ask siguro si Sir Ed, sir, being in the industry for a long while na, and you've seen different cycles. When clients ask this kind of questions, how do you respond?
Um, I think the best strategy is you must learn how to do averaging. Let's say um, you bought at a higher level. In order para mababa yung cost mo, you need to buy additional in order to bring down your average cost. So in that way, that will allow you to at least either minimize your losses, or there's a possibility na baka you'll go kumita ka pa. For an example, let's say if you bought during the beginning of the year at about 7, 8, so, and then all of a sudden during the peak where the market had bottomed, it reached to as low as about 4, 8. So if you're able to buy at that price, then therefore your average cost has drastically gone down. Siguro, let's say if you bought a 50-50, siguro 7, 8, tsaka 4 something 8, it should be about between 5,000 to 6,000 siguro at your average price. Mm-hmm. And right now we're hovering at about 7, 1. Mm-hmm. So in a way, you're basically be recording a profit now.
Yeah, so averaging, Sir Ed, sir.
Yes.
Sir June, maybe would you like to add anything about this question? No?
Sorry, could you repeat the question?
What would you advise fund holders that are still in the negative because of the coronavirus pandemic?
Okay.
So Sir Ed, sir, mentioned averaging. What about you, sir? What's your opinion?
Yeah, siguro dudugtungan ko lang yung sinabi ni Ed, sir. Agree naman ako sa sinabi ni Ed, sir. But before you average down, make sure you're at peace with, you understand what's happening in the market. With the market, and I don't mean like have a detailed understanding of what's happening in the market, but at least a broad sense of having a view whether the market should go up or down, and if it does, and if your view is or you subscribe to someone's view that it's going to go up, then you act accordingly. From our vantage point, the market should go up at least 18% from where we are over the next 12-18 months. So the answer is quite obvious, echoing Ed's answer, which is to average down. I mean, improve your cost if you're underwater, because your upside is, and I said at least 8,300, because I think that's an easy target, especially if foreigners start playing the rebound in earnings growth for next year.
All right, thank you, Sir June and Sir Ed, sir. Can we move on to our second question? All right, so what do you think is the biggest risk to the market in 2021, and what strategy are you applying in your fund to minimize this? Maybe I can have Ms. Gabs comment on this.
Biggest risk in 2021, perhaps resurgence of the cases again. Although it's a smaller risk because vaccines coming out. Some are saying by second half next year it might be available here, or maybe in 2022 rather. What we're doing to minimize risk, we choose the better quality companies and include those names in the portfolios.
All right, thank you, Ms. Gabs. So, Miguel, I'd like to get your opinion on this.
Good afternoon, Mark. Okay, just like what Gab said, one of the biggest risks is the resurgence of COVID. But another risk you have to take into consideration is if stocks do not meet the high expectations being set of them. If you look at the market, we're the best performing in Asia since September 30 till the end of November. So a lot of expectation is being baked in that the recovery will be fairly fast as opposed to gradual. Now, in the first wave, this is all hope. This is all sentiment. Investors are not going to compute. So what's the best way to mitigate risk? Sometimes the best, in this case, the best defense is having a really great offense. We buy the companies that we know can meet or exceed these expectations.
Okay, great. Thanks, Miguel. So, siguro we can move on to our next question. It seems that the market rally will lift all boats in 2021. Where is the biggest opportunity given where prices are today and the opportunities you see? So siguro I can have Mike comment on this first.
Okay. So I think for 2021, well, considering valuation still, companies or sectors that will really benefit are, I guess the reopening sectors, right? So the cyclicals, the consumer discretionary, the property sector, the banking sector. So those are, well, perceived to be the main beneficiaries going forward, especially since they were the hardest hit, with the pandemic. Yeah, but considering the valuations, you still have to consider valuations, I guess, when looking forward to 2021.
Yeah, thank you, Mike. Sir June, do you have any thoughts on the question?
Uh, yes, absolutely. I think consistent with what we mentioned earlier, that the biggest opportunities in the market, are you talking about stock specific or sector specific? Because
Yeah,
if
maybe
it's
sector specific,
say
like for
sector specific, as mentioned earlier, reopening benefits property companies, ordinarily banks, but be a bit more cautious still on banks because there still are some asset quality questions, how NPLs will rise. But reopening property, consumer discretionary, definitely, um, uh, transportation absolutely will benefit from reopening. And then ESG, I think there was a ESG is also, I think, an underappreciated theme because to try and simplify and shorten the answer as much as I can, again at risk of oversimplifying things, ESG means lower risk of a catastrophic event for the companies because they adhere to ESG. Aside from you're doing good and you're doing things for purpose, um, also ESG results to, since given the lower risk rating for high rated ESG companies, that means your fundamental score, your fundamental rating goes up also. Uh, it means a favorable, usually relationship with regulators, or you have favorable uh, action from regulators. You and these translate to higher equity, fundamental equity value for companies and stocks. So uh, if that's not enough, there's also growing, increasing interest in ESG themed funds. I think if you look at Morningstar, the funds related to ESG related funds already surpassed $1 trillion in assets under management this year, and those funds will look for a home. And when they look at the Philippines, at some point it will reach our shores. Actually, it's starting already. That will generate investor interest in those ESG companies. And lastly, I think it was Miguel who mentioned earlier. I'm not sure if it was Miguel, but I'm sorry, it was Miguel. Someone mentioned earlier. Uh, Philippines is largely old economy. That's true. However, there are emerging new economy plays in the Philippines, and some areas that come to mind when you talk about drivers of the new economy, technology, and all that. Even if you don't have a direct tech play, you have companies that provide fixed broadband services, which is part of the uh, part of the platform for all of this technology or interconnection, di ba? You also have logistics, which represent fulfillment in the e-commerce chain, which is a huge gap in why the Philippine e-commerce um, theme cannot fully accelerate and play out because there are gaps in the logistics front, and I wouldn't be surprised if these logistics companies start going up because these are going to flow into their earnings. And as I mentioned at the start of the webinar, stock market is all about the stock market direction will all about where the direction for earnings. And if the economy is doing well, earnings will do well, even if there's a delay, and the stock market will price that in at some point. So yeah. So again, reopening, uh, ESG champions, and new economy.
Yeah, thank you very much for the comprehensive answer, Sir June. No, I think what's
Is that short for
really
mahaba yung answer?
yeah,
Yes.
no. What's really
Yeah.
interesting with what you mentioned is the rise of the ESG
Mm,
investing. Maybe in some other webinars we can tackle more of that kind of theme with you guys, no?
sure.
So if we can move on to the next question. Okay, Miguel, this for you specifically. So for investors who are aggressive, what fund portfolio would you recommend? So I guess the person is asking for a mix, for instance, of different funds that he can include in his or her portfolio.
Okay. Number one, before you pick the fund, fix your asset allocation. Go all in equities, okay? This is your maximum risk, but don't borrow money, okay? Just go all in. Number two, I mean, you can just do the fill equity fund. You don't want to do a dividend yield fund. You don't want to do a tracker. Use the fill equity fund. In fact, we actually have a fund that is outperforming the market by more than 15% this year. I just won't name it, but we have a mutual fund like that. If you want that type of risk, you look for funds like that. It's actually already green this year. Absent that, do the field equity fund and increase your equity asset allocation to 100%. That's how you go all in. And I just want to add, no, I'll do this in 10 seconds. We went through dark times in COVID, okay? Some people went through even darker situations, but there is light at the end of the tunnel. There is hope. So if you're in the negative and you still have ammunition left, use it to buy because there is hope and it will come. All you have to do is have the money to invest and try not to die. Stay alive and you're ready to make money.
All right, thanks, Miguel. No, so very straightforward. So according to him, equities, fill equity fund. All right. So yeah, thank you for that, Miguel. Next question: is it a good idea to invest in multiple index funds? Siguro let me ask the fund houses who have index funds. No, maybe start with Mike. Mike, is there a benefit to having different index funds?
Yeah, I'd have to disagree with this one because I mean it's if it's an index fund, it'll be basically the same, no? So the performance will be the same. So really no need to, I guess there's little need to diversify if it's just going to be all index funds still. What you'd rather have is maybe have an active fund and complement that with an index fund. Yeah.
All right. Thanks, Mike. Miss Gabs, you also have your Sun Life Prosperity Philippine Index Fund. Do you share the same view?
I share the same view. It's all the same. Maybe to those investing in index fund, look at the tracking error of the fund, look at the fees of the fund. So those are some things you should look at. The lower the tracking error, the better for an index fund.
All right. Thanks, Miss Gabs and Mike. So very clearly, according to them, just choose one index fund, and you'll be fine. Okay, Miss Gabs, we have another question for you. In terms of telcos, how do you see the third telco player to perform in terms of growth versus the two large players? So we have Globe and PLDT.
Okay, and the third telco being
I think we all know. Probably referring to Dito.
uh I don't quite look at Dito. Although the two incumbents in terms of valuation are quite attractive right now, Dito, it really depends on execution. I don't know their valuation at this point. Also, they have a commitment to penetrate a certain percent of the population. I'm not sure how that will go. It's all about execution.
Okay, thank you, Ms. Gab. So clearly, as she mentioned, no, it's all about execution. So we have a lot of questions still, no? So can we move on to the next one? Sir June, this is for you. What logistic companies are you targeting for 2021? So ano ba yung nasa radar nyo, sir?
Um, I'd rather I hope it's okay. I'd rather not answer that because it might disrupt some of the stuff we're doing. But maybe the merits of logistics again, it's a vital element of the e-commerce, the increased relevance, increased adoption of digitalization and e-commerce and tech, uh, and to have that. I mean, it's interesting because e-commerce in China, which is one of the more mature e-commerce areas in the world, actually started after the SARS episode in 2002 or 2003. There were two companies, Alibaba and JD.com, that Alibaba started doing B2C and B2B after the SARS episode, and then JD.com started selling their products on WeChat. For those who know what WeChat is, right after the 2002-2003 pandemic, and 2 years later, Alibaba sold, I think, $1.5 billion worth of goods and services, and JD.com did the same. And then the Chinese e-commerce penetration rate jumped from low single digit to, I think, 20%, something like that. So that's something that I wouldn't be surprised. Maybe not in that magnitude, obviously, but if e-commerce and it's hard to see why not, actually, to be honest, uh, becomes more relevant, and it is already becoming more relevant, and uh, logistics is absolutely a going to be a key element for that. So there's different ways of playing it. You can play it last mile, you can play it through property logistics, but at this point, that's all I can say. Just buy the fund if you guys want to benefit from these themes. Thank you.
Yeah, thank you, Sir June. No, even without naming specific stocks, I think what the viewer who asked this question can take away from what you said is that yung logistics sector seems to be a very, very interesting one. No? So maybe ikaw, kung sino ka man nagtanong, no, just try to look at what companies are operating within that sector. Okay, if we can move on to the next question. Okay, with businesses taking on debts and loans or restructuring them, do you see any risks of default? And how does this affect your investment strategy? Maybe I can throw this question to Sir Ed, sir. Sir.
Well, again, because of this situation, you cannot discount the possibility that some of the businesses may have to restructure their loans. But so far, from our investments right now, we don't see any particular company in our portfolio um, that is basically on the risk of default. I think a lot of our companies, listed companies, and basically have lived through during the ASEAN financial crisis. I think they've had that a bad experience, and this is the reason why I think our companies are now in a much better position um, to have that their balance sheets are, I think, stronger as compared, let's say, during the 90s crisis. I think that's basically the main difference that we had seen from this crisis and as compared to the late 90s crisis of the ASEAN financial crisis. I think in addition, if you look at the past crisis, a big number of the companies during those years have taken a lot of dollar debts. I think that's one of the I think, key risk, key factors that has led to, a lot of companies have experienced some default. But this time around, because our debt market has grown substantially, and banks are in a better, I think, in a much better position right now. So far, there are only a handful of companies that have a very big dollar exposure, and sometimes those companies that have very large dollar exposure, they have also natural hedge. So in a way, if ever there's basically any depreciation of the peso, they're not di sila masyado ganun affected. In addition, I think our peso right now is stronger. We, so I don't see so far on the companies that we look at or we hold, um, they don't have any risk of facing default.
All right, thanks, Sir Ed, sir. Miguel, can I get your thoughts on this?
You said that the rising market will lift all boats. It will only lift boats which don't have holes on the floor. Years back, we already know what those boats are. We don't have them. If other people will see them next year, we saw it ahead. We don't have them.
All right, thanks, Miguel. No, so very, very clear answer from our experts. Can we have the next question? Okay, what listed companies will benefit as to vaccine distribution in the Philippines? No, so I'd be interested to know, are there companies directly exposed to vaccine distribution? Sir June, do you know of companies or sectors in general?
Uh, I actually have not thought about it, to be honest, Mark. But I think what you need to be, what's important is you eat healthy, you sleep well, and take care of your body.
Yeah.
I'll answer.
Yeah, thanks. Go ahead, Miguel.
If there's a vaccines distributed here, will you guys go out more? Will you buy more products from the stores? Will you buy more property? Will that make the economy hum faster? Will that bring our growth closer to where it was pre-COVID? If the answer to that is yes, then nearly all the companies listed in our market, which is a traditional economy, will benefit once the vaccine is distributed.
Yeah, Ms. Gabs, can I get your thoughts on this?
I agree that it benefits the general economy if vaccine is available here. On vaccine distribution, maybe the logistic companies that June mentioned might benefit, considering like some vaccines have to be stored at a certain temperature and all. Maybe.
All right. Thank you, Ms. Gabs, Miguel, and Sir June, no, for those thoughts. Do we have more questions? We still have a lot of questions. No? Tech stocks dominate key stock exchanges globally, but they are close to zero in the Philippines. What Philippine stocks can best ride the positive momentum of global tech stocks? Mike, do you have any thoughts on this?
Yeah, sure. So yeah, I guess this is true. So we have no pure tech company here in the Philippines. So maybe if the person who's asking this question is referring to the big cap tech names in the US, like I don't know, an Apple, Amazon, or Netflix. So maybe the way to play it is through internet usage, no? So why not the telecom sector? If that's it's I mean it's not purely tech, but I think it's the best way to play it. In terms of manufacturing, we don't have that much in terms of capacity, and we're not like the first choice in terms of manufacturing cell phone components. No, so I think yeah. So I think I'll stick with the telecom or the inform telecoms or internet service companies.
All right. Thanks, Mike. Sir Ed, sir, may I get your thoughts on this?
Yeah, unfortunately, we're still old tech economy. We're predominantly being um, all tech, but I think what you can invest are basically indirect beneficiaries. Those are the companies that have I think, are investing into this kind of companies like the telcos. They have investments in e-wallets or e-wallet companies. That's basically, I think, that's an indirect play. In addition, I think you can also look at some other conglomerates that are also investing into this kind of business. But I think predominantly, I have to agree with Mike that the only, I think, substantial investment that the sector has invested in this space are the telcos.
All right, thank you, Sir Ed. Sir, siguro in the spirit of keeping the schedule quite followed, because some of our fund managers have expressed that they still have some other engagements to attend to. Maybe we can have last two questions. Okay, would you advise resetting portfolio every year? Uh, Miguel, what's your take on this?
Okay, if you're a busy guy, I really don't suggest doing that. This is what you do. I'm gonna give you like expert advice right here. This is our job every day, to take care of people's money and grow it. Instead of worrying about resetting your portfolio, just give us your investable money, we'll take care of it for you. We don't just reset every year. We change it based on news, we change it based on flows, change it based on a number of factors. And all those factors are taken into consideration to make your money grow faster than if you did put it in any other fund. So just give it to us, we'll take care of it. You'll wake up a rich man.
All right, thanks, Miguel. Ms. Gabs, how about you? What are your thoughts on resetting or rebalancing your portfolio every year?
I'm more of peso cost averaging every time. I think that's a better move rather than resetting your entire portfolio annually.
Okay, so just continue investing, no? So I guess that's a very practical advice for investors, no? What you and Miguel said, kasi a lot of people, they really don't track the markets in any way naman. So better just do peso cost averaging and
Give it to the experts.
yeah, leave it to the experts, no, for most people. Yeah, can we have our last question? For now, like I said, no, we understand there's still a lot of questions. We'll try to do our best to answer all of those unanswered questions, especially kung may specific questions tayo to the fund managers. What would you advise a newbie investor? What is the best investment he or she can she or he put her or his hard-earned money at this point in time? Mike, can I get your thoughts on this? Newbie investor looking for the best investment.
Okay, I guess you'll have to know yourself better. It will still depend on your I guess situation. Are you a retiree? Are you a student? Have you got a lot of cash in the bank, or is this all your money? I mean, it really depends on, I guess, on each person's personal situation. No? And just to add, equities is not the only asset that you can put your money into. There's also bonds and etc. No, so really you have to ask yourself whether you can take the risk. What's the priority? What's your priority? Is it capital preservation? Is it really growth? Yeah, it really depends on you. No, only you can, or your financial advisor can answer that.
Okay, thank you, Mike. Sir Ed, sir, any quick thoughts on this?
Yeah, just to add from what Mike had mentioned, I think it all depends on each individual's target or goal. Um, Again, it also depends on the age, the profile of each investor. For, let's say, a newbie investor, most likely you're basically still in your 20s, early 20s, or 30s. Um, and considering you still have a very long years ahead, So basically, you might consider, putting more of your money in equities because it basically provides um, a higher growth in the long run. But let's say basically you're already um, in your late 40s or 50s, and basically your whole or they have built up, and you're basically preparing for your retirement. Then you might also have to change your portfolio in terms of asset allocation. And I think it all depends. It all depends on your goals.
All right, thanks, Sir Ed, sir. So that's about the time that we have for the Q&A. Like I said, we'll try to get back to each of you. And at this point, siguro, very quickly, before we close the session, just want to get some last thoughts from our panel of experts. I'd like to start with Sir June. Sir June, any last words, piece of advice for our investors going into 2021?
Things are improving, and the Philippine stock market is capable of generating at least 18% upside over the next 12 to 18 months. And the best way you can do that is, as mentioned by my fellow fund managers, is to be in the market. And if you're negative, you're underweight, you're underwater, then this is the time to average down selectively. And active management works. I mean, there's funds, ours included, that is a living testimony that if you really do your fund, you do your research, and you have a clear strategy, and you have a clear exit strategy and entry strategy, then you can actually outperform the market. And I know you said a few words, but if I may, can I just add to what Mike mentioned earlier? If
Go
you're
ahead,
a
sir.
newbie investor, I think you stick to the basics: fixed income and equities. If you're a young newbie investor, then you can have more equities over fixed income, because you can, if it doesn't work out, you can pwede mo pa bawiin. If you're an old newbie, so I'm not discriminating, more fixed income over equities. And once you get to the point where you understand you're not a newbie anymore, then you can look at alternative investments. Maybe at some point, maybe even look at cryptocurrencies and Bitcoin. Yeah. Thank
All
you.
right. Thank you, Sir June. Miss Gabs, any last words for our viewers this afternoon?
Euro, stay in the market given all the input you've gotten from experts in the equity market. Uh, well, I think you know the sentiment of everyone. It's a more positive view on equities. So hold on.
All right, hold on. Thank you very much for joining us, Miss Gabs. Sir Ed, sir, what's your piece of advice for our investors going into 2021?
I think my colleagues have already, I think, mentioned all the important things. Uh, I think the bottom line here is you need to be in the market. Um, it's I think if you're just going to stay on the sidelines, nothing will happen.
All right, so very well said. You need to be in the market. All right. Mike, any last words for our viewers?
I'm just gonna say it out. I guess this one is for the call traders, the active traders, no. Please consider putting some money into the funds that we're offering. Not only do you get charged less than going to individual stocks. I mean, if you're going to replicate the portfolio, no. Imagine just entering into 30 stocks whenever you want to buy. That's gonna take a lot of time, a ridiculous amount of time. So of course, having 20 to 30 names in your portfolio by going to the funds that we're offering, you're basically getting basically the saying that don't put all your eggs in one basket, then you're basically getting 20 to 30 baskets, right? So please consider the funds and leave it to the experts, as Miguel said. Yeah, and look forward to a great 2021. Thank
Thanks a lot, Mike. So on that note, leaving it to the experts. Miguel, last words for our viewers this afternoon?
Dear investors who are listening, especially to the newbie investor as the last question. I was once like you. I was a newbie investor too, and I didn't know what to do. The best gift you can give yourself is you learn how to invest your own money. If you do not have the time nor inclination to figure out the vagaries of the stock market, give it to a fund that has a consistent track record of outperformance and that really looks after your interests. Other than that, save, invest, and stay alive. Merry Christmas in advance.
All right. Thank you very much, Miguel. So, on that note, I'd like to take this opportunity to thank all of our fund managers who have graciously and generously shared with us their insights and wisdom for this afternoon session. So, I hope lahat po tayo, we got a lot of learnings from this session. Hopefully, we understood better yung investment process of the different types of equity funds available here at COL. Just some last few reminders. If you need some guidance, we'd like to invite you to follow us on the following channel. So we have a Facebook, Instagram, Twitter, and YouTube account. So that's at Call Financial. So kindly just look them up. So I really hope lahat po tayo, we're going to take all the learnings and more importantly, act on it going forward. As we've learned, as we've seen this afternoon, there are many ways, different ways to participate in the market. At the end of the day, it's a matter of trying to see which ones best fit your return and risk objective, even your own views going into 2021. So with that, ladies and gentlemen, thank you once more for joining us this afternoon, and we'll see you all again next time.